Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, as well as Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning. Good morning.
Good having you. Let's check a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index is currently trading at $38,444. Bitcoin is slightly down about 2% over the past 24 hours. And the CoinDesk Ether price ETX index is at 2506. ETH is also down about 3.3%. And the new DFX CoinDesk's DeFi index is trading at $523. It is down about 4.3% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. So our top story, we're continuing to monitor these crypto taxes that are apparently one of a handful of issues that held up the entire 2,700-page infrastructure bill, according to CoinDesk sources. The issue hinges on what is considered a broker, and that a limited definition would exclude some businesses like miners and change the scoring of the bill, which is currently expected to generate $28 billion in tax revenue from the crypto industry. Yet the market's not really reacting much to that. Emily?
No. Yeah, I find that really surprising just because, when you have a headline that has both $28 billion and crypto taxes in it, you would think that this would have more of a negative impact on the market. The market's not reacting that much, which seems to me maybe that's a sign of maturity because there are a few things that we don't know. First, we don't know exactly how this bill will pan out. There are people trying to amend it. And also, maybe people are understanding that to some level of regulation and some level of regulatory clarity is actually good for the industry.
This is something else. I think what we're seeing is probably a bigger issue in play. To be sure, Bitcoin options today, and Umkar Goodbally noted that there are more calls being purchased right now. So the market on the option side is a little bit geared towards bullishness. But what we're also seeing is that crypto is actually moving out of some of the crypto-to-crypto exchanges. This is another story that was also on our site last night by Muyao Shen. So they're moving out of crypto-to-crypto exchanges, and in many cases, they're moving to crypto-to-fiat exchanges. In other words, better possibility, for instance, of liquidation to fiat. There are other concerns happening in the crypto markets right now. You have Binance just recently, HSBC said that they won't allow credit card purchases on Binance. Not that it was a major thing, but it sort of speaks to sort of the general market fear that something else might be happening on their exchanges. And they're really worried about other things and looking at other things. So it's not necessarily just U.S.-centric. We have to remember a huge part of U.S. trading, of crypto trading, doesn't happen in the U.S. U.S. is still relatively, it's an important factor, but not the biggest.
All right. Well,
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Well, $1 trillion infrastructure bill is being negotiated by Congress that promises to collect $28 billion in taxes from crypto investors. The legislation includes enhanced reporting requirements for crypto firms that expands the definition of broker to potentially include miners, node operators, decentralized exchanges, and peer-to-peer transactions. Our first guest, Perianne, founder of lobbying group the Chamber of Digital Commerce, has been working round the clock to amend the language. Welcome, Perianne, to the show. So, Perianne, I'd love to hear what are your key concerns with this bill and what revisions are you seeking?
The biggest concern is clarity on the definition of a broker. Although that definition has been refined significantly over the weekend and part of last week up until when it was formally put forward on Sunday, it's still too broad. It is not clear if miners, if software developers, if validators, those who are staking digital assets, liquidity providers, also decentralized marketplaces, it's not clear if they are going to be included in this. It is absolutely essential that we get further clarity there. There is a two-pronged strategy underway, well, really a multi-pronged strategy underway to make that happen. The best way to get that clarity is in the legislative text itself. There are efforts for an amendment. Senator Toomey announced yesterday he does plan to offer one to address just that. Another way to get this type of clarity is through legislative history. And there has been, Senator Portman has made statements to us directly, as well as to the Washington Post, that he is going to put forward a colloquy. So we have a couple opportunities to get that on the Senate side. After this is done in the Senate, it will go to the House. There may be opportunities to get further clarity in the House. And then, of course, it will have to go through a regulation and framework process through the IRS itself. And there may be more opportunities to finesse the language there. So this is not done. This process is still very much underway.
So when you say that it's absolutely essential that it's changed, could you just sort of break it down for us? Like, why is it so important? What's the worst that can happen if this sort of definition of broker remains unclear? Just for the viewers who aren't really following this at the granular level, why is it essential that this has changed?
Okay, so what this bill does is it clarifies who has to report to Treasury, to IRS, information reporting requirements, as well as what they're reporting to their customers. So if you are a miner or even certain peer-to-peer marketplaces, if you are not collecting that information, and if you have no way to collect that information, you have no way to comply. Which means what will likely happen is those types of players, those types of stakeholders will move offshore. And that is only going to be harmful to our economy here in the United States. I think we could even make a national security argument for that. We should have a robust crypto ecosystem. We should be validating transactions on U.S. soil. That's something that we believe very strongly in at the chamber and want to make sure we preserve that through this process.
How did this problem get into the bill in the first place, though? Because it seems rather obvious that, like, a miner wouldn't have customers, which is part of the essential definition of a broker, right? So how did it get in there? Was it just that the people who drafted it didn't really understand this aspect of crypto, or was there some other reason?
Yeah, one of my favorite quotes to share is logic and reason don't always persist in the political process. A lot of people are saying it's because of the way it's scored. That is something that has been quite frustrating. We have not been given any of the information on how they came up with this $28 billion. Portman's office is estimating that it is going to cover about 1/6 of the entire infrastructure bill. So there's so much weight on this provision because it scored so high. Again, they should release that information. The industry and third-party experts should be able to verify that. So a lot of it has to do with how it's scoring. However, Portman's office, numerous senators, as well as Treasury has said it is not their intent to include minors in this bill. They've just really struggled to get that definition finesse so it makes that clear. It is rather, I mean, a lot of the pushback has been that it's unlikely to put clear exemptions in the legislative text itself, that there's other ways that are more appropriate to do that. But again, it would be best for the industry to have that clarity in the text itself.
Perianne, I wonder if you can go ahead, Lawrence.
Oh, no, kind of related to this was this bill that Don Beyer from Virginia proposed yesterday. It seemed to come out of nowhere, of course, and the question is, where the hell did it come from? and who came up with it? And is it anywhere tied to all the things that are happening right now with the infrastructure bill? How did this happen? Was it a competing interest group? What's going on there?
Yeah, so the bill that Representative Beyer has put forward really looks to develop a comprehensive regulatory framework for the digital asset space. It looks to define a number of terms, like what is a digital asset security. There's a lot of implications for stable coins in here. I don't think this is directly related to the infrastructure bill. I think this has a lot more to do with all of the comments and the concerns and criticism that has come with the lack of regulatory, or the perceived lack of regulatory oversight for the digital asset ecosystem. We do not see this bill in a position to move through the legislative process. So this is not our priority this week. The infrastructure bill is definitely set up to move through the legislative process. The buyer bill definitely is not. He does not serve on all the relevant committees to move this through. However, he is the chairman of the Joint Economic Committee, so he does have some degree of leadership on the House side. But there's a lot of things to break down in this bill, and we are working through all that and all of the ways it could impact our members at the chamber as well.
Just going back to the infrastructure bill, can you tell us a bit about your involvement? I understand you're working a lot with Senator Portman, and what have the back and forth negotiations been like?
So I think, there's a lot of people who have been working with Portman's office directly, as well as many other members of the Senate and Treasury and the Joint Committee on Taxation. Everyone has been incredibly unified on how essential it is to ensure that those who have no way to comply are not looped in. We have been given assurances that that is not their intention, but it's absolutely essential that we get that in writing, either in the text or in legislative record. So we are waiting on that. The process has started, so we should be able to see that soon, within the next couple hours or days. But what I can say is that the industry has been incredibly quick to come together, and a huge part of what has allowed for the progress that has happened already is because people were prepared. For example, at the chamber, we have a tax task force. We've been convening for over 4 years. We've submitted numerous comment letters to the IRS on this exact topic, on information reporting. So we were very much prepared to have these conversations. We were able to convene people on a very quick basis. We're able to refine our positions, and that's made all the difference in the world. So we're very confident about where we are, but again, the job is not done, and there's still more work to do.
Just quickly back to the buyer bill for a second. There's so much in that bill. Can you what do you think are the most sort of significant recommendations in there? And just, if I understand you correctly, are you just saying that you don't think it's going to pass at all?
It's not in a position to move through the legislative process. I mean, anything can happen. This is Washington, but it's highly unlikely that this bill would pass into law. There would be a lot of changes, as well as other things that would need to be in place in order for it to have propensity to move. One of the things that we're spending a lot of time talking about is stablecoins. This is not the only place where we are having to talk about regulatory oversight for stablecoins. As you know, Secretary Yellen convened a meeting just a few weeks ago with multiple regulators really talking about what should the oversight of stablecoins look like. And even Governor Brainerd over at the Board of Governors of the Fed made a statement earlier this week, also talking about the concerns the Fed has for stablecoins. So that is a huge outstanding issue that still needs to be discussed in more detail. There's some who believe perhaps this should be regulated as a security under the SEC's oversight. There are others who are pushing for this to go under the Fed's oversight as a payment system. There are others who are saying stablecoins are already regulated. They're regulated by both the feds and states, and we don't need further oversight. So there's a lot of things that need to be fleshed out when we talk about the oversight of stablecoins, and this bill is one place where those discussions are happening.
Perianne, we've got to wrap it there, but thank you for breaking it down for us and keeping on top of things and sharing your insights. That was Chamber of Digital Commerce founder and president Perianne Boring. Coming up, checking in on Asia and the crypto markets update with CoinDesk's Christy Harkin.
CoinDesk Indexes, the market standard for crypto assets since 2014. The CoinDesk DeFi Index is our latest product and provides insight and exposure into decentralized finance. Our indexes are key for investors looking to access and understand crypto markets.
The CoinDesk DeFi Index is the best tool for a diversified approach to this compelling new category of digital assets.
The CoinDesk DeFi Index, measuring the investable DeFi market.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, August 3rd, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Coming up, crypto-related crimes surged to a record level in Hong Kong. Australia's buy now, pay later platform AFTERPAY to be acquired by Square. And Chinese tech giant Tencent has launched an NFT platform. Let's get you up to speed from Asia to the world. First up, crypto-related crimes have surged to a record level in Hong Kong. Almost 500 cryptocurrency crime cases were recorded in the first 6 months of this year, with one victim losing a staggering $16 million. Total losses from the 496 recorded cases were 214 million Hong Kong dollars, or around $27.5 million. That means the number of cases this year has already exceeded the cases reported for the whole of 2020, with total losses almost doubling so far. Now, Hong Kong police attributed the rise in cases to the growing popularity of crypto investing in Hong Kong, as well as the fact that people have been spending more time online during the pandemic, which has given scammers more opportunities to pounce. Money laundering, investment scams, and robberies and face-to-face transactions are the three most commonly reported crimes. But Hong Kong is not the only place to be suffering. Crypto crimes are generally on the rise in other parts of the world too, with reported cases in the US rising on average 300% year-on-year between 2017 and 2020. Meanwhile, global payments giant Square is putting up the big bucks to pick up Australia's AFTERPAY. Square has agreed to purchase the Australian fintech company for $29 billion. The deal will allow Square's Cash App mobile payment service and its seller business unit to offer buy now, pay later services by integrating AFTERPAY's functionality into their own systems. In return, AFTERPAY users will be able to benefit from using Cash App's tools, including the option to make Bitcoin purchases. AFTERPAY's buy now, pay later services, better known as installment loans, allow consumers to pay off purchases in smaller amounts with participating merchants, or better known in America, the layaway plan. The deal comes shortly after Square CEO Jack Dorsey announced the creation of an as yet unnamed new division dedicated to decentralized finance using Bitcoin earlier this month. And on to the markets now. Bitcoin down almost 4% at a little over $38,500 as of 4 p.m. local Hong Kong time today, the end of a down day generally of trading in markets across Asia, with investors cautious over the spread of the coronavirus Delta variant. Though Hong Kong, starting August 9th, is opening back up to vaccinated tourists and easing up of some of the strictest COVID border controls in the world. And in the top 10 for cryptocurrencies, Polkadot down almost 6% and XRP down 5.5%. This is a pullback after a general rise of top altcoins over the past few days. And finally, Chinese tech giant Tencent has joined the NFT bandwagon. Tencent has launched an NFT trading platform called HUANG using its Xixin chain. Its debut sale features 300 audio NFTs based on a well-known talk show called Shi San Yao. They will be sold for 18 yuan, or almost $3 each. Hong Kong-based crypto financial services company Amber Group told Forecast News that amid the crackdown on crypto trading and mining, NFTs are an interesting option for Chinese businesses amidst a more relaxed attitude from China herself.
I think people are looking to the next thing, and I think NFT itself is not ICO, or it's not crypto pump and dump, so to speak. So I think the government's, the regulators' attitude towards this is more friendly. So yeah, I think maybe within China, there's going to be a next hype that jumps into NFT as well.
Indeed, Tencent isn't the first Chinese tech giant to try NFT sales. Remember back in June when we told you about Alibaba affiliate Alipay selling 32,000 pieces of NFT art in just 24 hours? Well, seems like the appetite for NFTs in China is only getting more voracious. And that is the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading at $38,400 or so, down about 2% over the past 24 hours. And the CoinDesk Ether price ETX index is at 2506. ETH is down about 3.3%, and the CoinDesk or the DFX CoinDesk DeFi's index is currently at $523. DeFi is down just over 4% over the day. And joining us now to discuss the crypto markets is Christy Harkin, CoinDesk Technology Managing Editor. Welcome to the show, Christy. So Ethereum appears to be rising over the past few weeks, up with Bitcoin. Do you see the London hard fork as you take a look at this technology? What is happening, and what implicate for Ethereum?
Well, the London hard fork is due to launch tomorrow at around 12 o'clock or shortly thereafter UTC. That's about 8 a.m. EST, our time, and at about 12,400 some odd blocks to go. And it's part of the roadmap designed to lead up to the release of Ethereum 2.0, which will replace Ethereum's current proof of work protocol with proof of stake. And the London hard fork has been tested to death. It's been on lots of test nets. It's done very well. So the developers are pretty sure it's good to go. And everyone's been really looking forward to this. And I think that that's probably part of the bullish signal for Ethereum at the moment, is just this idea of progress and moving forward. It's designed, many of the Ethereum improvement proposals, EIPs, involved in the hard fork are designed to make transaction fees on Ethereum less volatile and more predictable. So things are going to sort of settle down on the fee front, is the hope, which again will help with people who are trying to use Ethereum in order to implement their smart contracts and their various DeFi trades, etc.
So, Christy, I'm going to ignore the Maple Leafs poster you have in the back. I know you're trolling me. I don't appreciate it, but I'll let it go for now.
Go Leafs, go!
Love you, Lawrence.
Oh gosh, go Habs, go! So when you guys, so for London, what does it mean for traders? Is it going to mean that their transaction fees are going to go down as they trade? What does it exactly mean for people in the market who are going in and out of ETH? What are they going to notice? Are they going to notice anything at all?
That's kind of been up for debate. Ideally, yes, it should lower transaction fees. It should make things a little more stable. But not everybody agrees with that. But let's just say, yeah. So you've got EIP 1559. This is the one that everybody talks about with the London hard fork. There are five EIPs rather, that are being implemented with the London hard fork. But the one that gets all the attention is 1559, which is going to activate a mechanism to curb total supply growth over time by taking a variable amount of ETH out of circulation at each time a transaction is executed. Now, Bitcoin has a set market cap, which everybody knows 21 million odd Bitcoins will ever be mined. Ethereum does not have that cap, so you don't have that fixed supply. But what EIP 1559 is going to do is burn ETH every time there's a transaction. So it will stabilize the amount of Ether out there. So you're not going to over time, you're not going to just have this infinite amount of ETH. So
Chrissy, that's a really good. Sorry.
Yeah, go ahead. No, it's good.
I was just going to say that's a really good explanation. So I guess my question about the hard fork, are we going to start seeing these changes right away, or is it going to be more staggered? Because sometimes it takes a while for these things to actually, become a reality.
Well, 1559, from my understanding, would kick in right away. I could be wrong, but I do know that, for example, the Ice Age EIP, which is the difficulty bomb, that will kick in on December 1st. That's part of the hard fork, is that it will set the date for the difficulty bomb to happen on December 1st. So this is a mechanism that will incrementally increase the difficulty of mining on the Ethereum network. Effectively, over time, it will freeze proof of work in preparation for Ethereum's move to proof of stake. So that is part of the London hard fork tomorrow, but all it's doing tomorrow is setting the date, programming the date for December 1st.
All right, Christy, thanks so much for joining us. Looking forward to seeing how the London fork takes place tomorrow.
Yeah, we'll all be watching it.
All right, that was Christy Harkin, CoinDesk Technology Managing Editor. And up next, we have CoinDesk Global Policy and Regulation Managing Editor, Nick Day. Join us soon.
From fueling local economies to connecting global markets, the future of money is taking shape now. Crypto State by CoinDesk will bridge communities of crypto investors, thought leaders, and developers to tell the global story of decentralized finance. Join us for this virtual event series as we make stops in Israel, Bahrain, and the United Arab Emirates to dive into the movements that are disrupting markets and changing communities. Register today.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick. So you've been monitoring this infrastructure bill, also the buyer bill. What are the updates?
Yeah, so the infrastructure bill, we're getting into the amendment process now, and we might see an amendment that specifically addresses the crypto provision. Senator Pat Toomey, Republican of Pennsylvania, said last night in a statement that he is working on an amendment to try and change or modify the language around the crypto provision, presumably to restrict the term broker to trading platforms, OTC desks, entities of that nature, and explicitly exclude miners and node operators and the like that the industry says should not qualify because they cannot comply due to not having customers or not having parties who can fill out broker specific tax reporting forms, etc. And then on the other side, the buyer bill has been introduced. We're still waiting on to see which committees take it up and start evaluating it. Too early to really have a firm update there yet.
Nick, I understand that Gensler is supposed to make some comments today. What are you expecting from that?
Yeah, so Gary Gensler will be speaking at the Aspen Institute at 12:15 Eastern. He said in a preview with Bloomberg that in his view the crypto industry does need some more regulation, and this isn't really a new refrain. We've heard this from him before. In I want to say April or May, just weeks after he took the job, he went to Congress and said, we need some more authorities and we need to clarify, how exactly the SEC can regulate the crypto market before we can do it. But we need to do that in order to protect investors and customers. So this isn't a new refrain. And I think the thing to look out for is, does he have any more specific details on how exactly he believes the SEC can approach this? Whether that's, oversight authority over exchanges at the federal level or something else.
So, Nick, we just had Perianne Boring, and we've been talking about this over the past couple of days, where it just seems like this infrastructure bill had somebody would have known something enough about crypto to put in all these provisions in the first place. Of course, yesterday, we had the speculation that it could have been Treasury Secretary Janet Yellen. But really, are we any closer to understanding how all this stuff got into the infrastructure package in the first place? How the buyer bill came about? Do we have any idea, like who or and one or multiple people are throwing these things out to Congress? Where let's face it, not everybody in Congress knows much about anything, let alone crypto.
Yeah. So the infrastructure bill first, it everyone I've spoken to seems to suggest that Senator Rob Portman, Republican of Ohio, inserted the provision or had his staff do so. And we know that Senator Portman's been looking at this since at least April. He questioned IRS Commissioner Chuck Rettig about this very issue during a Senate hearing in April, and then published a statement saying he was working on a provision. So the roots of this seem to reach back at least that far. And while it's unclear whether or not IRS and Treasury were consulted, it's probably safe to assume that they at least knew this was coming and may have had a little bit of input on it. So it's definitely not something that just popped up out of the blue. It there had to have been quite a bit of work that went into it. And then on the House side, again, I'm not sure if we can say that Treasury Secretary Janet Yellen wrote the bill, but presumably Treasury would have had at least some sort of a role in answering questions about it and possibly providing even recommendations. Although this is speculative on my part.
Nick, I was just reading your article about the infrastructure bill and how high of a scoring that the expanded definition of broker had in generating revenues for this $1 trillion infrastructure bill. So if they start playing around with that and potentially not having miners included or other stakeholders in the blockchain industry, that would reduce the significant chunk of revenues they're expecting to get from the crypto industry. And so, would they do that? And if so, where else would they get the money?
Yeah, that's the big question, right? So the thing is, the Joint Committee on Taxation, which is the entity that, said, okay, if you do this, you'll probably raise about this much revenue, hasn't published its methodology. So we don't know how exactly they got to the 28 billion figure. And therefore, it's hard to say, what changing the language of the bill might do to that. So it's very possible that, you can exclude all the miners, exclude, node operators, whatever, and you'd still have that 28 billion, projection. But we just don't have the information to know what exactly the case will be.
All right.
And so, yeah, that's what a lot of the reluctance comes from, it would appear.
Yeah, Nick, it's a busy week in policy. Thank you for keeping us updated. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Time now to check in with Crypto Twitter with our tweet of the day. This one from Ryan Leachman, who describes himself as a natural gas Bitcoin miner, tweeting, "At what point in time do we just say Bitcoin is a religion and become tax exempt?" Amen to that. All right, that's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.